Hi everyone, welcome back to the TradeInformer Podcast. Today I'm joined by Mike Ayres, who is the CEO of Rostro Group. And as I'm sure most of you know, Rostro Group is the owner of Scope Prime and Scope Markets on the retail side. So, Mike, we're talking in February, 2026. I think it's probably been, definitely from speaking to some people, I get the impression it's been like the weirdest few months since Swiss franc, maybe ever for a lot of other people. Can you just kind of talk about what it's been like?
Yeah, definitely. I think this topic we could fill the whole podcast with, I think. But yeah, I laughed when you said about February because it certainly feels like it should be much further into the year given what it's been like. I think it's been a challenging period for brokers. I think behaviours have been different as well as the market environment. So you can put Bloomberg on and see what's happened with gold, see how volatile it's been, see how aggressive the moves have been. But I've also seen that typically the behaviours of clients has also been very different. And that brings challenges to kind of brokers in terms of risk, in terms of infrastructure, commercial terms. So it's been a pretty fast way to start 2026, to say the least.
Yeah, nice. And last time we spoke, I think it was a written interview, but I think it was probably less than 12 months when you were into sort of starting a new role. So how's that going? Are you enjoying cracking the whip, breaking backs of the people below you?
I remember our first chat, to be fair, and I think speaking very openly, I was still finding out what it meant, I think, to be a CEO, if I'm honest. I think that role has changed. I don't know if it was the pandemic that shifted what people wanted just generally in terms of the company they work for, the person that leads the company. But I was still trying to figure things out. What type of CEO do I want to be? And at the start, you look back at people that you have been led by, or you read a book, or you listen to a podcast. You try and pick up some words of wisdom. I would say where I've got to now is, and genuinely one of the best bits of advice for anyone that steps into a new senior role is, be authentic. You figure out your approach. You don't try to be what you think people want or need. Be cognizant of what a good leader would have in terms of characteristics, but ultimately you've got to be comfortable in your skin. You've got to be who you are. So cracking whips, it's part of it at times. But no, genuinely, I really enjoy it. I'm lucky. I've got a good group of people that I work with. I think that part of being a CEO that sometimes not maybe understood is it's a privileged role. It's supposed to be stressful. It's supposed to come with lots of things, right? But it's equally privileged because you're expected to, but also you get to set the path, dictate certain things, and then you get to bring a really good group of people in to help me with that. And I'm really fortunate. I've got a really good team around me. Yeah,
nice. And last time we spoke, one of the other things that we talked about was M&A. So obviously, Rostro acquired the Scope brand, and when we spoke last time, you talked a bit about how you were looking at opportunities. So is that sort of still on the horizon, or are you just going to focus on the Scope Markets retail, Scope Prime, Insti business? Although I would also say it seems like you've done quite a lot for both of those, definitely on the institutional side.
Yeah, it's a bit of both, really, the answer. The acquisition with Scope Group and then creating kind of two separate retail and B2B brands, that was a really important early move for us. I think it was the one that really allowed us to accelerate, to push forward, just in general in terms of what we wanted to do. Came with a lot of people, came with infrastructure, licenses. M&A is something we're always open to. We've had conversations every year, pretty much.
Have you had more conversations recently?
I certainly have. Certainly have, if I'm being perfectly honest. But we're also very disciplined. What we try to do is there's no there are two things I also wanted to add just generally in terms of M&A, and I think it will go to just, I think generally what goes on and will happen in the market now is there's not much value in us acquiring another group where there's 60, 70, 80% kind of almost operational overlay. So things for us, licenses, people in terms of functions and personnel, technology, that it's not as easy as you just bring people together and then you try to kind of get the efficiency to happen after. It's a big thing. Yeah. So we resist the temptation to look at businesses where it might look good on paper in isolation, but actually we're already 60, 70% of what they're bringing to the table. So why duplicate, and sometimes more than that? The second thing that I think generally, and this is what we found, if I'm honest, in some of the conversations we've had, is we like to understand relatively quickly. So A, it doesn't use a lot of our time, resource, capacity. B, also just to be fair to whoever's the other side of the table, that there's often a very big disparity between the value. It sounds like so simple, right? But you can chuck a load of things on the table and it might look great and everyone's aligned, but ultimately for in any asset swap, you've got to have two people that mutually agree a price and some of the details around that. So fundamentally, if we see something in our eyes being at different price point to what a seller would see it at, we quite quickly want to understand that so that we don't find that out after 6 months, 3 months, 9 months, or long of time doing DD and etc. Get there early. But certainly there's been, we saw it quieten down actually. I'd say, this is just my table, my lens, right? I saw last year less, and then towards the end of the year, and start of this year, a few more popped up. Unsurprisingly, as we touched on, but yeah.
Problem for this industry, and it seems to be for the iGaming industry as well, right, is that you're in a business that's super, if you do it well, like super cash generative, feels amazing, but actually it's often not that different to what other people are doing. And then if there's like minimal growth opportunity, it's kind of like, well, no one wants to pay like a big multiple for that. Going back to the gold discussion as well, right? You guys sort of reset your terms. And we're quite open about that. I think it was in January as well. More broadly, do you think there'll be a sort of reset in the market? Because I think if you looked at, I think it's happened for a long time anyway, right? Where you'll have companies that offer crazy IB deals, they'll offer insanely low to tight spreads, like better than the underlying market kind of thing. Do you think we'll sort of see a reset in that and in the wider industry where people are going to be more, let's say, realistic about what's possible? And also, this may be a more controversial part of that, do you think there are people who are actually unable to survive if they are forced to do that, just their business model doesn't function?
My honest answer is I hope so. No, genuinely, because we included over the last however many years, we as an industry have competed with each other, and spread compression, effectively cost, was just one aspect that we all competed on. And we ended up here through millions of moments in all different brokers taking decisions to do that. It wasn't an overnight thing. We've all gradually got to this point. Do I think it will happen? I don't think everyone will do it, personally. I don't know, if I'm honest. I hoped, genuinely, I would love for the industry to have some sort of standardization around this. An expectation, if some core brokers could say, look, the prices of assets, when the asset price has also doubled over the last 24 months, and implied volatility, average daily ranges, they're different than what they used to be. The cost to transact with that particular product and then offset, whether you do or don't, but the cost to offset, what we've done is create a huge imbalance. I don't think everyone will move. I think some would move a little bit, gauge what happens a bit more. We took a decision based on what we thought was right, if I'm honest. I don't think we understood that some customers may on the institutional side do less business because they might be able to get if spreads top of the list, they might go, okay, I'm going to send half the business I give you, I'm going to move it over here and keep a bit with you.
Yeah.
But we also sat down and said, we've always been proud of our customer support. We've got 24/7 coverage, 24/5 in relationship management on the institutional side. Good product range. We've got all the prime products that we offer. So we've said, look, let's be a place where people can get access, good service. Yeah. You'll be able to get competitive terms, and we can do things for certain customers that are high value, kind of important, bespoke pricing. But if the first thing you're going to ask us for is, can you give us, bonkers pricing, bonkers spreads, like quite quickly we're just going to say it's probably not the right place for you, and let's not get into that. So yeah, I genuinely hope it is something that people are thinking about and looking at.
Yeah, I don't think they were. I think they got saved by the drop, and now they're just going, okay, let's keep doing what we were doing before, maybe.
You know what? It's we say this at Rostro, right? There's so many different business models that can be successful. We have our plan, we have our model. It's not the only one that will work. So there are some companies that have been around for longer than us, 20, 30, 40 years in this industry, very successful. They've grown, they make decent money. They have a completely different model to us, and that's okay because that might work for them. Yeah. So I respect that. I'm not going to sit and say everyone should think like we do. It's not the right approach. But I do think that if we had this conversation before the Friday, how we would be talking and how others would be thinking would be different. But then I sit and I think, that's one day. Yeah. So you're waiting for a day. A day that silver 1 in 100 years type of move. Yeah. It's so for us it's we're all in the volatility game because it drives interest. Customers will only transact and speculate on a CFD product if they think it's going to move around. Yeah. Investment products different. We have a separate plan and strategy for that. It's much more benign. Income's slower growing, but it's passive. So here, if you sell an active product, you need volatility. There's no point if gold's sat now in a $10 range. Okay, there might be some interest, but probably less than when it's moving $400, $500, $600 in a day. But yeah, I think, do you have two trains of thought from here? Do you look at that Friday and think, wow, lucky? Or do you look at that and go, okay, that's the plan? Because I don't know how that's a plan personally, but our model's different, right?
I don't know. Chain smoking, a lot of cigarettes, a lot of sleepless nights. Yeah. No, I mean, I think I just was at the event before we were speaking right now, and I would say 2 or 3 people said to me, if that rally had continued for another week or 2 weeks, then some people would have actually just been out of the market. So I would like to think they would rethink it, but I'm fairly confident that they won't. Okay, moving on to something a bit different. So, obviously we're here in Dubai, in the UAE. You guys just became one of the latest brokers to get a Cat 5 license. So, do you sort of have big plans for the region? Is that the first step in, doing something broader, or is it, you just you have the presence here, you want to have the license?
A couple of things really that's on our mind for the region. So from the plan for us from the retail side of the business is to focus on direct, so non-IB related business. Up to this point, we've been largely IB driven on retail. It's the typical way that a lot of brokers either start or for the first X amount of years will get some traction. We've always wanted to move into direct and look at performance marketing. We've got the skill set within the team that we've got at the company. What we've been working on is the kind of data and product stack in the background. So part of what will happen from it'll be mid to end of March is when people will start to see that we'll be doing more performance marketing here. With that, we will go live with our own CRM product that we've been building over the last 12 months. A slightly different approach in terms of the messaging around marketing. So what I mean by that is that we understand that, a bit like we were saying earlier, there's a leveraged product that people are interested in, and that's trading. Yeah. That's not investing, that's trading. short term, high risk, high reward, and that's that piece. But the invest product, we've introduced an invest account inside MT5, and then we've got Iris, which we can open up to high net worth individual customers, and the same with CQG. So what our idea is that, okay, there's an ask for this that exists, and we can put that out to market. But equally, and this is why we're doing the direct channel, is that there's typically not as much interest from IBs want to bring you what's quickest and easiest to bring traffic. What we also want to start doing is to see individual clients, at least from our lens, see individual clients come in. Yes, you might trade with high leverage and speculate on gold, right? We get that, we can offer you that. But also you might want to buy a fully paid CFD of MR, for example, here, or Microsoft or Amazon, all these guys. So the plan is to do both. Direct channels is the big focus for us on the retail side on the marketing piece. Institutional, we're quite well covered, I'd say, in terms of broker dealers, if I'm honest, David. We do a significant amount of volume. We have our pricing structure. We have our systematic hedging structure. I don't want to say I'm content, because I don't think I'll ever be necessarily with some of our metrics, but it's something we do well and we continue to do well. What we're looking to grow and see more significant growth from this region on the institutional side is more asset management, kind of wealth management, entry-level funds, people that might find it difficult to go and get not just a tier one bank prime broker, but possibly not well served by the kind of tier two segment as well. Yeah. But for us, they're from an AUM standpoint, price point, good customer, they'll get good service, they'll get the same access in terms of market range. So they're the two things that we see from the UAE.
Do you have anyone already trading with you in the asset management side? And is that a bit of a different? I always think that's if you want to get the brokers, it's not. I mean, it's probably difficult to get them as a customer, but it's not difficult to sort of identify them, True. Go and pitch them, all that kind of stuff. Whereas the secondary market you mentioned is like way more nuanced and sort of opaque, and it's so what people are doing is so different, right? It could be someone just doing long. Vanilla equities fund, or it could be some guy who's doing managed futures, needs sort of super low latency setup, all that kind of stuff.
It's definitely different. Yeah, 100%. I mean, you're not going to find there are forums for that audience, but they're not the expo that we've been at this week, right? They're not heavily marketed. What we see is that the broker segment, liquidity segment, is more competitive. I think that is because it's relatively simple to get a bit of technology, offer a fixed API connection, and recycle someone else's price, and immediately you're an LP within a week or two. Probably not a very good one, but you're an LP nonetheless. On this side, it's genuinely it's years of building up a product stack that's going to serve these guys. An example being, we've built our own proprietary back office, so reporting and statements that we generate for these customers are completely kind of in-house. Yeah. So we have an asset management customer from Switzerland, and he has bespoke reporting, just because he's small, doesn't have a high head count, bespoke reporting so he can look at things like asset allocation relatively easily. He can reconcile what he's got with us versus another counterparty. So the asks are different, but what we've found is that this is an audience that's very different to brokers in the sense that clients last as long as you can make them last, sort of thing. But this type of customer is a lot more sticky, work with you long term. There's a true win-win. You both want the same outcome. We want these types of customers to grow their AUM, fundamentally clear more business with us. Yeah. They make more, we make more. We just work through it together. I think getting out word of mouth is probably the way that we get most of our traffic on this particular part. Yeah. It's not been so much hitting the website, seeing something advertised. It's a guy that's managed a portfolio somewhere, goes somewhere else, and then tells them, hey, by the way, you might not have heard of Scope Prime, and you have heard of Cantors and Jeffries and these guys, but yes, they're not as long kind of in the field as these guys, but they have this, this, and this. So let's add them in with the others. Yeah. So that's how we've seen a lot of our uptick on the kind of more managed side of the business.
Nice, yeah. And yeah, one of the things you mentioned was the fact that you've invested a lot in product, and I think, genuinely speaking to a couple of people just while I've been here in the last week, they have talked about your crypto product as being really good. Can you sort of talk about that, like what the investments you've made, and if there are any other plans to expand it?
I learned this through the planning phase of crypto, and we're very lucky. We've had some phenomenal people join us that kind of from that space. To do it well, you have to do it properly. You really do. We've got separate connectivity technology. We've got a different back office system. We've got different prime brokers. And to be honest, the reason we went with a plan where we said, okay, it's going to take some time, is because we weren't chasing the next all-time high moment. It wasn't around driving quick acquisition through the business. Let's get some runs on the board. Yeah. It was a genuine belief that the regulatory landscape was shifting. Things like futures being offered on CME, CBOE, showing elements of maturity meant we felt like, okay, it's here to stay. It'll keep evolving. It'll figure itself out a bit. There'll be some changes, I'm sure, like with anything. But I felt like, okay, it's here now. So we committed to it. We've worked with leading technology providers. We've got, as it stands, I would say the best price in terms of a CFD pricing product of anyone we've seen. Yeah. We're new, so we're trying to get, again, that kind of reputation, the word of mouth going out there. If you're a meta broker, the only LP you need for crypto is us. Yeah. And I won't say that about other products. There are tons of other really good LPs. There are some that are phenomenal at digital asset pricing. But if you offer MetaTrader and you want to back-to-back your predominantly Bitcoin and Ethereum CFD business, the best place to send that is to us, because you've got a like-for-like reconciliation of platforms, so P&L calculations are easy, and our price is phenomenal. And all we do is just charge a markup and a commission, depending on what terms you're on, and just act as agent and pass it straight out the back door. Yeah. Where we're going next is our VASP application. Again, something that we've seen and learned through the process is that, and I quite like this, is that the regulators are asking you very specific questions. They're really testing infrastructure, policies. I mean, we've put compliance, legal, finance, risk, IT departments through bespoke specific training programs, looking at chain analysis, different surveillance frameworks, because it's different. If you're going to have, because with the VASP license that we're adding, the plan is to go through with custody, spot, so physical crypto broking, and then in the future also payments, which kind of all interlinks. Yeah. So there's a derivatives piece, which is CFDs and futures that clients can get access today, and then there's what comes post VASP for us, which is the real physical crypto product. Yeah. It sits right at the top of our priority list, if I'm honest. It's from a strategic standpoint, we see, how to describe it, it weaves through a lot of the rest of our business. Yeah. Because even today's clients, today's brands, they have clients that are interested to trade, to speculate. So having the best pricing that we have seen of anyone means that our retail business can also pass that benefit on to the clients. Yeah. Everyone tends to, I found with crypto, it's short-term viewpoint sometimes, because you'll see Bitcoin now 50-60% of its all-time high, and then everyone will say it's finished, it's done. Then we'll be sat having probably me and you another chat at some point saying another all-time high, and it's taking over. So we try not to. We haven't done it for either reason. We're not trying to, as I say, chase the all-time high kind of FOMO type element. We want to be credible in the space. We'll be bringing in dedicated commercial people, salespeople for the product, and there will actually be another brand that we will launch, but from within. So non-M&A this piece, but there'll be a dedicated crypto brand that by Q4, I'd like to say this year will be something that we will announce.
Awesome. So, but with that, and that would just be, it's not going to be an exchange or something like that.
Not exchange. There's a lot of things you can do, a lot of activities around crypto you can work with, but we like physical broking, institutional broking, because it plays to some of our current capabilities and strengths. And the payments piece was an important part for us. Yeah. I mean, we work with today, as most of that expo room work with a couple of the same providers. Yeah. It's a necessary part of doing business in certain territories and in our industry. It's a huge cost. Yeah. So just being candid, for us it was, how do we rebalance that cost that's going to keep growing as we grow, but equally then at some point turn it into a revenue stream? Yeah. So we've selected those two as the main focuses for us.
Yeah. Well, I think even outside of, you could say higher risk or whatever jurisdictions, it is, to my mind, kind of a better payment method, even between, so for example, I have someone who's doing some kind of contract work for me, and actually going through the regular banking system, it was crazy. I mean, so it's this person is from Armenia, to be honest. So not as, I don't know, like I guess not well connected into the mainstream financial system, if you like, and the fees are just crazy. And so I haven't actually done it this time, but from past experience, I can say for sure, if I was just sending $800 in USDT or whatever it is, it's way faster. It's like done, boom, and there's nothing. I don't know. There's nothing wrong with the transaction I'm trying to make. It's just the existing infrastructure is super expensive and kind of clunky, I guess, for lack of a better term. Yeah. So yeah. Anyway, well, I guess the final question is, I've seen in some of the materials you guys have put out, you've talked about sort of being almost like an investment bank or investment bank of the future. Can you sort of elaborate on that and maybe just talk about what the final vision, if such a thing exists, for Rostro Group is?
Yeah, definitely. It's I understand that's quite a big, bold headline, to be honest, and it's effectively our North Star. That's what that's how we've positioned it. It's the goal for us across the entire group is to be a place where people can make, invest, manage money. So when we've looked at what we want to become, it genuinely kind of trends further towards us becoming in the future more like a bank than a broker. We understand where we started and how we're kind of moving through the different pillars and product lines that we want to add. And to be honest with you, we've discussed, do we look at organic, so going and doing banking applications in certain territories, and there's a bit of research happening at the moment around that. Do we look at investing in partnering with an existing kind of incumbent bank? That's another route that we've spoken about. We're in the process of building our own, I don't want to call it, it's not a platform. So it'll be a web-based and an application-based product. It's not a trading platform. It will allow you to do things within it that gets close to trading, but it's going to be more than simply just buying and selling CFDs, derivatives. Yeah. So the idea for us is kind of where we're getting to is we'll still offer these third-party systems, platforms today, Ayres, CQG, various APIs, MT4, MT5. They'll all sit there. There's clients that want those products, want those platforms. They're native to them, fine. Hedge fund who wants Ayres to trade DMA equities, absolutely, it's here for you. The point we're working towards now, we've really started on this journey by building our CRM. We're building CRM, client portal, we're building kind of back to front. And then the app will work like, I don't like the phrase financial super app personally, but the idea is that within it, there'll be a lot of different financial products that we will offer. Yeah. So you can imagine you can come in and there's a trade section. You go through to trade. You might be able to do some basic trading. Yeah. Equally, you may be able to then get pushed to MT4, to Ayres, the other products that we offer. There'll be an invest tile kind of offering. That will take you somewhere else where in the future we're looking to add managed services. So someone may come and say, I can buy Bitcoin somewhere else as a CFD or a spot, but also I'd like to put $10,000 to work with someone, but I've looked at my current brokers list and there's 1,500 traditional ETFs and funds, but there's maybe just BlackRock, Bitcoin ETF and a few others that track. What we want is to fit what we feel is fill a gap. So on the wealth side and the kind of invest side, it's going to be crypto focused, but also some of our own proprietary trading strategies that will come through as well. And then there'll be a sort of wallet payment offering, which will be crypto friendly, that'll be fiat. So that's where that payment piece with our VASP kicks in. And then there's a banking segment. And to be honest, where we're staying away from, we don't want to go through no commercial banking. We're not going to get into mortgages. Yeah. We're going to try and be clever. We're not going to do any of that. We're going to stay in our world. What we've looked at is simple kind of corporate banking accounts for institutional clients, where there's kind of a win-win. You can have banking, have a crypto wallet with us, and get liquidity and market access. So all of that can exist with one relationship. And then we've started to think about, on the retail side, what do we want to add? I mean, we don't want, from a banking standpoint, to go out and try. We're not trying to build Revolut. Yeah. Genuinely, we're not. They're doing that, you know. So yeah, and they've done a good job, right? Exactly. So we're not trying to just ride on their coattails. We're just, the idea for us, and why I've kind of intentionally, there's specifically gaps left in the plan, because I see it as we're going to be very firm and set on the destination, but the journey to get there will evolve. Yeah. Because I don't want to be too rigid in every single step of the way, thinking I know everything exactly how it's going to play out. 2 years down the line, a regulator changes something happens where another region becomes interesting, customers are more interested in something else. We've got to be agile, we've got to be able to respond to that. So building our own product will be the tool that enables us to go, hey, it's 2029, we thought we were going to do this thing, but instead the opportunity's over here now, and we can pivot. Yeah. These are great products, these are great platforms for customers. They will continue to be enhanced by the vendors that produce them, and we'll offer them. We'll be very competitive, good service. This piece is where that sort of investment bank of the future headline is what this business, what Rostro is becoming as we go forward. So I'd say we've started it from what we've been building kind of under the surface. Yeah. And the goal is to have this all-in-one money product, really. People want to come and they can do things with their money. They can invest, they can buy, they can look at pre-IPO products. There's a lot of things that we've got kind of coming through. And some of this has taken 4 or 5 years to get exchange agreements in place, clearing relationships, the back office to work properly so that when you put something on a platform, great for the client, but can the internal teams do their work and tasks. So yeah, it's going to be a lot of work. It's exciting, but this is where we're heading.
Nice. Well, Michael, thanks very much for doing this, and hopefully we can talk more about the stuff in 12 months time and it's all going to be there.
Absolutely. Thank you, David.
Cheers.